Meta to pay $1.4 billion to Texas. Meanwhile, the Senate passes a landmark bill to protect kids on social media. That's coming up and more on Business Matters. Good afternoon, and thank you so much for being here with me. I'm your host, Don Ma. Starting off with markets, as always. Mixed day, it looks like, overall on Wall Street, but some big movers here in both directions. We're covering the latest earnings throughout the show, but to begin here, the major indexes here. S&P 500 today down 0.5%. Tech stocks taking a bit of a hammering. The Nasdaq down just 1.5%. Now, the Dow Jones here bucking the trend, and is up around 0.5%. So full earnings data coming out later, but big movers today. PayPal up 8.5% today. Latest earnings report easing competition concerns. Embattled CrowdStrike down another 9.5% today. Delta as well seeking damages for the global tech outage. And consumer goods company P&G down almost 5% today. More earnings analysis later in the show. So now we're seeing more data, it looks like, suggesting that the U.S. jobs market is deteriorating rapidly. So today's government JOLTS report showing the total number of job openings continuing to slide. So in the private sector, openings now at a 6-year low, but government job openings are near record high. State and local governments posting 120,000 new listings last month. Other new data on hirings and quits also showing deterioration. Onto Amazon. If it was bought there, it is up to Amazon to recall hazardous third-party products. This is according to the Consumer Product Safety Commission. The U.S. agency determined that Amazon was a, quote, distributor of defective products listed on its site. And it has ordered the e-commerce giant to propose a plan to notify customers about these products and recall them. The agency says there are more than 400,000 products subject to this order. It includes, for example, faulty carbon monoxide detectors, hair dryers as well, and children's sleepwear that violated flammability standards. The CPSC says Amazon has argued that it was not acting as a distributor within the meaning of the Consumer Product Safety Act, and therefore has no responsibility to the items. All right, on to Google. It's getting backlash here over its Gemini Olympics ad, and this is underscoring broader fears over artificial intelligence. So in this ad, a father of a young athlete appears to use Google's AI software to write a letter to an Olympian instead of her daughter doing it. So online, people criticize the concept of this ad. They say it uses AI to replace a child's authentic expression. And in a statement, a Google spokesperson said that AI can be a great tool for enhancing human creativity, but it can never replace it. Tech companies have promised AI would improve lives by completing menial tasks, but critics charge that many early AI tools seem to enable computers to generate traditionally human creative products. For example, art, music, and as well as stories. Now, Facebook parent company Meta's shares down over 0.5% today, and it's going to pay a $1.4 billion settlement to Texas. This is over claims that the company used biometric data of users without their permission. So the Texas lawsuit alleged that Meta was in violation of the state law, which prohibits capturing or selling a resident's biometric information. That's like their face or fingerprint without consent. Texas Attorney General Ken Paxton said the settlement is the largest secured by a single state. Meta says it is pleased to resolve the matter. And the Senate has passed 2 significant child online safety bills: the Kids Online Safety Act and the Children's and Teens Online Privacy Protection Act, to be specific. The KOSA would require social media companies to provide better protections for users under age 17. Companies would be required to provide guardians with more control over minors using the sites. And COPA, on the other hand, would create stronger online privacy protections for anyone under 17. It would also bar targeted advertising and allow users to delete information. Critics are arguing that the bill's definition of harm is too broad and could lead to censorship of content. The bill is heading to the House next. So is it technically possible for social media companies to even implement these guardrails if this bill becomes law? Earlier, I spoke to social media professor at the University of Florida, Andrew Selepak, about this. Andrew, thanks again for coming on the show. So the bill is going to ban targeted advertising and give the option to delete a person's information. Will this be achieved?
Well, I think, again, the devil's in the details and how all this will work. What this is really about is trying to kind of look at how young people's information is being collected, how advertisers can target to those individuals, what type of content those individuals could see when it comes to violence or sexual content, but how this will all be able to be done, where you have young people who'd have to prove their age to demonstrate that they would be covered by this, how that gets done in terms of a young person having and obtaining the identification to demonstrate this, then proving to social media companies, collecting that information. I think, again, it's in concept, it's a great idea. We'll have to see how it would actually be done in the real world.
So in terms of content then, if social media companies need to restrict certain types of content or whatever they need to do to make it safer for children, do they need to alter their core algorithms to do this?
Oh, 100%. Because right now you kind of have where everybody kind of sees content based on what they do on the platform, the accounts that they interact with, accounts that they follow, who their friends are, who they follow. The algorithm is, for all of us, is kind of designed based on our actions on the platform. This would be very different because you would essentially have the algorithms changed where certain content would be blocked. It doesn't matter what content a young person interacts with, who their friends are. That would impact what advertisements they would see, what pages to potentially follow would see. It's a very different algorithm that would have to be used for young people to make it safer for them. And then the issue that pops up is if we basically are getting these social media companies to admit that they are showing young people content that can have a negative impact on them and then would only be protecting those young people, why couldn't we all get the same protections that we're not going to see content that is, of a sexual nature, of a violent nature that could have a negative impact on us? So it would be creating a separate algorithm for young people and then basically saying, hey, if you're above a certain age, you're going to see harmful content, but that's okay.
Okay, so then the immediate question I would have is, how would these regulations, like, for example, changing the core algorithm of a company, how would that affect the business model?
Well, what we know is that these companies are trying to reach young people. They're trying to reach young people because they want to make them lifelong users. They're trying to reach these young people because advertisers want to reach these young people. They want to get these young people to buy their products. They want these young people to create content about their products. Going back generations, young people are not just the tastemakers of society, but every brand knows that the earlier you can get somebody to be a loyal customer, you'll make them a lifelong customer. So for these brands, it's really important to reach them. For the social media platforms, it's really important for them to get them to be users.
So if this bill becomes law, do you think social media companies will be losing money?
Some, if this means that you can't have companies specifically targeting these audiences or getting around current laws that would target these audiences, it would cut down on a little bit of advertising, but not to where any of these companies are suddenly going to go out of business and won't be able to afford to operate. It could just be slightly marginal decreases in advertising that over the long run aren't going to make a big difference, because it's still going to be one of these things where if you build a 10-foot wall, someone will build an 11-foot ladder.
All right, Andrew, thank you very much for your time.
Thank you.
All right, moving on from that. Delta Airlines hires well-known attorney David Boies, and this is reportedly to pursue damages against CrowdStrike and Microsoft. The faulty July 19th update cost Delta as much as $500 million. Here's more details.
Delta Airlines has hired prominent lawyer David Boyes to pursue damages against Microsoft and CrowdStrike after CrowdStrike's faulty software update cost Delta up to $500 million. The airline has received over 176,000 refund requests after cancelling almost 7,000 flights and suffered reputational damage as well. Boyes successfully led the government's antitrust case against Microsoft back in 2001.
Boyes has experience with Microsoft, going after Microsoft in the past. So that is, I think, a good choice for them because he's familiar with how the company works, where they, what documents they have, how their systems work, who to subpoena, who to get discovery from.
Attorney Gerard Felitti says Boyes is the perfect choice. His previous fight with Microsoft ended up in a settlement in which Microsoft agreed to major concessions. Boyes also represented various Jeffrey Epstein accusers, including Virginia Giuffre, and he unsuccessfully represented high-profile individuals, such as Al Gore in the Bush v. Gore, Harvey Weinstein, and Theranos founder Elizabeth Holmes. Felitti says that despite Boyes coming on board for Delta, the real fight may be elsewhere.
Ultimately, this is going to be an issue for the insurance carriers. And the real litigation that I expect to happen will be by companies like Delta against their insurance carriers and the umbrella policies to make sure that they are compensated for their losses.
Felitti says Microsoft and CrowdStrike probably made Delta sign a terms of service agreement, which likely protects them from liability to some extent. And the insurance carriers have the money Delta wants for compensation. But he says Delta could still win in its initial case against Microsoft and CrowdStrike.
If Delta is successful, it could very well be the first domino in a hailstorm of lawsuits against CrowdStrike and potentially Microsoft.
Entity reached out to Microsoft, CrowdStrike, and Delta, but did not hear back before airtime.
And now let's talk about Toyota. Holding steady today, and this is despite global Toyota sales falling about 5% in June and global production tumbling. Now, output worldwide for Japan's largest automaker dipped nearly 13%, and this is the sharpest drop since the end of 2022 and the 5th straight month of decline. So at home in Japan, Toyota has been hit hard by a certification scandal. The Transportation Ministry found irregularities in applications to certify certain models. Across the sea, Toyota is facing fierce competition in China. Domestic electric vehicle sales and makers like BYD have rapidly gained market share. In fact, in June, it marked the 5th straight month where Toyota output in China fell by more than 20%. And with the Chinese economy continuing to deteriorate, Chinese leaders have signaled that stimulus measures will now be directed at consumers. And this would be instead of pouring funds into infrastructure projects. The CCP has seemingly been unable to stimulate the economy using the usual methods. It seems the plan is to now print money and put it in the hands of consumers. This, of course, could worsen the country's inflation problems. Economists have long argued that China's economic model relies too heavily on investment and has produced much more debt than growth in the past 15 years. Now, the first announcement from a major airline that it is scrapping its climate goal. Air New Zealand has dropped its 2030 climate ambitions, and the airline cited several factors, including delivery delays of fuel-efficient aircraft and the affordability of alternative jets. Its CEO saying that these were outside of its control and would need to keep its existing fleet longer than planned. And the airline had set a 2030 goal to reduce carbon intensity close to 30% compared to 2019 levels. All right, some more headlines today, rapid fire style. Top hedge fund manager Bill Ackman is expecting to raise roughly $2 billion from the IPO of a new portfolio, Pershing Square USA. The offering will mimic his hedge fund while charging lower fees and offering quicker access to capital. And Warren Buffett's Berkshire Hathaway has offloaded more Bank of America shares. This month, it has sold 71 million shares worth more than $3 billion. And U.S. single-family home prices remain unchanged in May, according to the Federal Housing Finance Agency. The 12 months through May, housing prices increased just under 6%, and that's the smallest in the past 10 months. Electric and gas utility provider CenterPoint Energy expects to fork over up to $1.3 billion to restore facilities damaged by Hurricane Beryl, which made landfall in Texas in early July. All right, good point to take a break. We have breaking news on earnings coming up later. Some of the biggest industries names after this short break. Don't go away. Welcome back. Top headlines today. The Senate passing the first major social media bills in 2 decades to protect children online. The bills require online platforms to take reasonable measures to prevent harm, like bullying, sexual exploitation, or drug promotion. And Meta settling for $1.4 billion with Texas over claims of using biometric data without consent. The Texas AG calling it the single largest state settlement. Meta says it's pleased to resolve the matter. And Delta has hired famous lawyer David Boies to reportedly pursue damages against CrowdStrike and Microsoft. Boies and his firm won $290 million in 2023 from JP Morgan Chase for Jeffrey Epstein's sexual abuse victims. He also was one of the attorneys who helped win the government's antitrust case against Microsoft in 2000. We have breaking earnings news. This is just in. Starbucks shares after hours up despite missing estimates. Same-store sales declining for a second quarter straight. So demand in China particularly low here. And chipmaker AMD shares up around 8% in extended trading. Revenues and earnings per share beating estimates. The company says data center sales more than doubled in a year. But the big news here is Microsoft shares down over 6% in after-hours trading. Revenue from Microsoft's flagship cloud product, Azure, disappointing. In just a moment, we'll have full analysis for you from Vijay Marolia in just a moment. First, a quick roundup of other big reports today. Investors rewarding PayPal and Pfizer today, but punishing P&G and Diageo. PayPal up 8.5% today after beating revenue and earnings per share estimates. Its branded checkout business outperforming, easing competition concerns. JetBlue posted a surprise second quarter profit. Its shares up over 12%. And the airline has been focusing on more profitable routes. Pfizer also up about 2%. It blew past second quarter expectations for revenue and adjusted earnings. Meanwhile, shipments for Merck's vaccine have declined in China. Its shares fell almost 10% today. Disappointing demand in China for P&G products also has its shares down about 10%, and shares for spirits giant Diageo tumbled 5% after the Johnnie Walker maker posted its first sales decline since the start of the pandemic. Now, joining us live is Vijay Marolia. How are you doing today, Vijay?
Fantastic, and yourself?
I'm doing good, thank you very much. So let's talk about Microsoft just reporting earnings. The big question here is, has its investments in artificial intelligence paying off?
I think it's going to take a little bit more time. The market right now, especially if we look at what's happening after the close, selling off. And that tells me that instead of under-promising and over-delivering, the entire AI landscape seems to be the reverse. It seems to be a over-promising and under-delivering. But this is going to change over the course of the next couple of years. But I think that for today, in the short term, people are kind of wishing that Microsoft had a little bit better.
What are your initial reactions on a high level? Were you surprised by Microsoft's results today?
I wasn't, but the only reason why I wasn't is because I have a fantastic partner, my partner Vandana Desai. He is our tech expert, and I'll be honest with you, we took our initial short position because of the conversation that I had with him. I don't want to get too far into the weeds, but you know, one of the things that we do, trees don't grow to the sky, and markets don't grow in straight lines. It's a zigzag pattern, and the zig part, if you were to associate that with headed north, that got a little bit too far ahead of itself. And so a market must correct. It's a healthy thing that happens, and it's going to give people an opportunity to buy back at lower prices.
Is Azure Cloud on a healthy trajectory right now?
I think it is. I think that Microsoft in general is on a great trajectory. What what's happening today in the short term is that all it takes is one small misstep in terms of guidance. So it doesn't even have to be your results. It could be your future guidance. And in many cases, it is your future guidance. Now, listen, the call hasn't started yet. So a lot of these questions, we're very anxious to answer them ourselves. And we're waiting for the call right now. So hopefully we can do a follow-up and I'll be able to give you a lot more detail.
So we've seen a bit of a bumpy road for tech stocks, perhaps in the couple days before, a couple weeks. Are you still bullish on tech? Where is it going?
I am very bullish on tech in the long term. And I think what's happening right now, well, I'll give you 3 bullet points. We're approaching the 3 most dangerous months historically in the stock market. A lot of people, as the saying goes, sell in May and go away. But actually, a better saying would be sell in the summer. And the definition of summer and the way that people spend their summer, that's changing. But in the summer, you have less bids in the market, and that's going to increase volatility. But I think that we would be fooling ourselves to not admit that the main driver of market prices right now is the Federal Reserve. So all eyes are on the Fed, and most likely in September, they're going to lower rates. I think that's going to lift all asset prices.
Of course, and we'll have coverage on that tomorrow. But do you think a lot of tech companies here are putting a lot of money in artificial intelligence? Do you think that money is going to pay off?
I think in the long run, it will pay off. I think that adoption is very slow. People were hating on the internet when it was new, right? And so I was watching in preparation for today's interview and in preparation for today's call, I was watching a lot of analysts and reading a lot of their research. And I think that they have unrealistic expectations about adoption. One question that one of the analysts, I won't mention any names, they were asking, well, are you spending any money on it right now? Oh, you're not? Well, that's what we're saying. Well, listen, here's what's going to happen. Companies are going to start replacing people, start replacing functions, start changing processes, because the processes right now could be easily and I would say very efficiently and effectively, more cost effective with using AI, simple programs, simple products.
Okay, and the reason why I'm reiterating this point is because let's take large language models, for example. What problem is it here to solve, right? And where does the money come from? If there's no problem, then there's no money to be made.
I think that the problem right now, especially if you talk to people in the HR department, it's compliance, it's payroll, it's inflation. So if you can focus on, let me take one step back, and I love the question that you asked. It is not about CapEx, it's not about energy, and it's not about the LLMs. It's about the prompts. We must understand the most effective, the most useful prompts. Those prompts must be specific to the process. That process has to be directly tied to your goals. And the people that figure that out, the people that concentrate on that are going to be way ahead of the people that are just using it as a buzzword.
Right. All right. Thank you so much for your comments today. Appreciate it.
Thank you.
All right. And with that, all the stories we have for you on Business Matters today. Thank you very much for watching. If you have any feedback for the episodes, please feel free to let me know. You can email us at business@ntd.com or leave a comment online. I do read them. And again, thank you for watching. We'll see you back here tomorrow.